Economist here. So we're going to talk more about the deteriorating lumber market as mills are now shutting down across the country, up in Canada, and this has been the case for quite some time. Now, as I've been sharing this information for years now here on YouTube, trying to explain some of the things that I have been seeing from boots on the ground perspective, sharing that retail experience that I am having. And when I think about some of the things that I have shared here on the channel, it seems to have gotten like maybe clouded in the noise of tariffs or, the Trump administration, causing all this havoc or something of that nature. And really, when we think about some of the circumstances that have led up to this is not a surprise. Like, I was able to call out the lumber market fairly easy when during the pandemic and the money printer and the lumber was shooting up to its all-time highs. I had recognized way in advance that there was lumber depletion taking place due to the fact that we had mill curtailments and shutdowns and all kinds of stuff happening all throughout 2019. So when COVID hit and the shutdowns happened, everybody pointed at that as the reason why lumber was going up to its all-time highs, not realizing that there was a year's worth of devastation that was happening long before the COVID pandemic took off. So understanding like the situation that's happening within lumber is much deeper and much farther than anybody would ever give it consideration for, because most of the time it's a very short-term kind of look at what has just recently happened that now causes this, and not really looking back any further. So as we lead into the future of what it is that's going to happen with lumber, I can only assume, right, because we don't know what the future holds, but I can only assume that with the depletion of mills that we are now experienced within the last year or two, that ramping up of the production is going to be very difficult. Like, how is it that you have loggers go out there and start cutting the trees to provide the mills with the timber, they all call it fiber now, but all the timber from the trees or from the hills to the mills. And if those guys, those logging operations start to deplete and diminish, there's not a lot of people out there who are going to fire that business back up. Most logging operations are very small time operations. Now, don't get me wrong, there can be logging operations that have a lot of trucks and a lot of equipment, a lot of people who work for them, a lot of shops. But even still, they're not like these nationwide logging operations. They're generally a location, and it's family run or something of that nature. And so when we think about how it is that these mills shut down, where is it that these loggers are going to send that timber to? Now, there is the idea that they can send it overseas, because that was a huge market for the forest industry here in the United States. See, a lot of people just look at the lumber. It's not just lumber, it's timber as well. There's two different products, right? Lumber is the sawn boards when you cut them up and then send that out for, being produced into houses or furniture or whatever. The raw timber, the logs themselves, that's also another product that is sold to foreign entities such as China, who then cuts it up themselves and then makes furniture and sends it back to us. So these two different products then provided the loggers with two different customers, right? The mills themselves and, right, the foreign buyers out there. Well, these tariffs have created an issue with the buyers of the foreign buyers who were then buying the timber from the United States. This has been hacked to pieces. Like, it's been very devastated for a lot of the logging operations and for the exporting of that timber. So here's half of their customers, or a good portion of their customers, that are just essentially saying no thank you, and then a bunch of the other customers are essentially just going out of business. So ramping that back up and bringing that back into any kind of like production that would resemble what it was that was, say, taking place in 4 years ago, or even 7 or 8 years ago, that's going to get harder and harder the further we go into the future with this depletion that has now happened. As far as the housing market goes, nobody's going to really recognize it until the ramping up of production within the industry starts to take off. And I mean home builders deciding that it's going to be time to start new projects. And that's going to come from essentially from the buyer traffic. So when the buyer traffic shows up, the home builder is going to be like, okay, it's time to start ramping up production. Now, once that happens, you're going to find that there's not a lot of lumber in the system. If there is any significant jump to the builder demand going into new starts, again, I couldn't tell you how much, how far, how fast, but if there is any kind of significant rise, I feel that there is not a lot in the system today that can meet any kind of significant rise in demand, and I just don't feel that there is going to be an availability of ramping up production the further we go into the future with the diminishment of logging operations and mill operations and everything else that we're facing here in the future. All right, want to keep this fairly short. There's links down in the description. It's not much different from what it is that I have been saying for a year. Not surprised by this situation. Again, this is the painful experience that people are probably not going to recognize until it has switched. And what I mean by switch is once the demand turns on, it's people are going to be like, oh man, this is manipulation and greed and all this. But yet here it is for a year and a half, even 2 years now. I've been warning of this exact situation happening. So again, it's best to look at it for what it really is and not for the manipulation and greed. This is a depletion in mill operations, not because they're greedy, because they simply cannot operate and profit. You have to think about it that way. Would you go to work and not profit? Of course not. You're going to go to work and you're going to profit, then you're going to show up and play the game. But if you show up and it's just like every day it's costing you and you're just going out of business, eventually you're just going to be like, you know what, I'm turning the lights off, I'm done. And that's what's happening with a lot of these mills. All right. Hey, Wayne, we got all-nighter up in the house. Let me grab my glasses. All right, Joshua, it was already manipulated long in advance. But see, here's the thing. People want to say that, Joshua, and you could go ahead and I don't know, maybe you're not, maybe you're talking about something else. Here's the thing, like I've been doing this channel for like 7 years now, and I have been accurately calling out the lumber market essentially the entire time. And I never once looked at greed and manipulation as the reasoning behind it. And now has many people who have come to me saying, dude, you don't know anything about the Fed, you don't know anything about commodities, you don't know anything about the markets, you don't know anything about interest rates, you don't know anything about what's going on with the real manipulation that's happening in the system. I seem to accurately call the lumber market 100% of the time. So that's pretty cool, right? To not know anything out there, but yet be able to call out the lumber market 100% of the time accurately. That's crazy, right? It means I probably am not getting something wrong. I'm probably getting it right. And I have been getting it right for quite some time now, and it's proof through all the calls that I have made on lumber. And people ask me, it's just like, all the time, they're like, dude, how do we use this to make money? And I'm not here to make money, right? I'm here to give you an idea of what it is that's happening within the economy so that you can take this information and use it for your own needs. But to try and say that, hey man, you need to give me information to make money with, it's going to be very difficult, and most likely you're going to end up being in a position in which that if you are not listening to every single word that I say, you're going to miss the opportunity to sell out again, and then you're going to blame me for losing money. So make those decisions on your own. All right, it's just a sweaty market. What about imports to meet demand? Import of lumber to meet what demand? Like the Canadian lumber or something of that nature? Like I can imagine that would probably be pretty helpful, but you have to understand, like the United States consumes about 80% of its own production. So yes, you can increase the demand, or I'm sorry, increase the inventory from the availability of foreign production coming into the United States, and I totally agree with that. Now, here's the problem that we are now facing if we go into the future, is that those foreign importers, which is generally a little bit coming out of Europe and mostly coming out of Canada, these foreign producers who are distributing here in the United States, who have essentially been severed off from the supply of, you know, available inventory coming into the United States, they have severed that kind of supply chain in a sense with, you know, the credible threat of tariffs and duties and, you know, just lack of demand itself. they are now forming partnerships with other nations out there, finding other places to start sending that material wherever they can, right? Because they're in business to do that. Now, not saying that that won't shift and come back to the United States where it would be easier again, but once those partnerships have been built, like, it's difficult to then shift away from it, right? So the longer it goes on, the worse that problem gets. Now, that might be a very smaller, insignificant one. Comparatively to the bigger problem is that there is only so much kilns and so much production space. So even if they wanted to ramp up production, what you're going to end up finding is that there is a limited amount of space and room to dry that lumber. Now, not all lumber needs to be dried, and some of it's green, but for the most part, the majority of construction lumber that is now happening, especially here in the Pacific Northwest, is almost always done in Canadian lumber for sure, but it's done in kiln-dried lumber, and that takes a certain amount of space and time, right? It's a big room that you have to put the lumber in, it get heated up, and it has to sit in there for a certain amount of time in order for that to dry out to be considered the kiln-dried lumber that is now meeting the qualifications of the building needs or whatever it is that's out there. Now, understanding that part right there is like limited production. It can only go so far. The only way to ramp up that production is to build more kilns, and most likely that won't necessarily happen unless you have a big rise in prices that are sustainable and been there for a while, right? Because it takes time to build these facilities. Now, something else that I wanted to kind of bring up is that we also have to understand that a lot of Canadian mills are operating in the United States. So at one time, I don't know if this is still the case, and I should probably look it up, but Interfor, which is a Canadian mill, one of the big ones, had more mills operating in the United States than it did in Canada. Think about that. Like, they're operating in the United States, producing in the United States, selling to the United States, avoiding tariffs in the United States, but the profits are heading somewhere else, right? And that was happening for quite some time. The British Columbia area was like major producer of lumber, like, and like for the size of the area and the amount that they pumped out of that area was just insane. High output, high cost producers. Now, these high output, high cost producers essentially were the market, right? And whatever was happening up in the British Columbia area made the rest of the market very sensitive to that particular location. Now, unfortunately for the British Columbia area is that it was very well devastated by a bug infestation. Forestry just got hammered, and just in an extreme way that was just so depressing to read about. All these poor families who have been up there for generations, that's all they did was forestry, mills, trucking, logging, that's it. And it was like done, right? The business out of business forever. So that then had a shift that began to take place because there was a glut of trees essentially down in the southern part of the United States where, 20 years ago, all these people had these plantations, these pine tree plantations, and all these trees are now coming into the perfect size. So now a lot of these Canadian mill operators are moving down to that particular area and setting up shop down in this region. So these things are happening right now. This shift has taken place. Yeah. All right. $4.99. Let's go read this super chat. Thank you so much, Buffalo Blanco 5141 for the $4.99. Here at Lennar, we are moving to higher end buyers with communities with more amenities. We are being squeezed in margin here in Texas. Yeah. See, this is pretty cool. Thank you, Buffalo Blanco, for that. I guess here at Lennar, I guess you work for Lennar. That's pretty cool. Thank you for being here, watching the Uneducated Economist. I really appreciate you, man. But this is a sign of more of like the Cantillon effect that we have described with the K-shaped economy. Like, essentially the higher income earners are just killing it, man. They're doing well, and they're selling homes, and they're buying homes, and they're like, they don't have any problems. It's the rest of the working class and what it would be typical for them to buy that is suffering, because essentially the working class job just doesn't cut it anymore. I mean, that regular day job, even if you had 20% down, the day job pay doesn't pay enough. right? You still can't make the interest payments on that house because the elevated interest rates and the cost of the home and everything else. So this is a major problem that has now faced the housing market, especially when it comes to the working class individuals, because essentially not only are the working class priced out, but then the working class wage doesn't keep up. Even the wage increase doesn't keep up with the cost of living and all the expenses that are happening out there. So they're falling further down the line while asset holders are moving up the line. And this is where the K-shaped economy is really now taking place. Is that essentially if you're an asset holder and have been for quite some time, you're probably doing quite well and going, man, I don't get why we do so well, but the working class is sucking it, is because essentially you have positioned yourself into assets. Most people who have bought a house and nothing else, when you say, man, how are you feeling about things? They're like, well, I bought my house 15 years ago and it's gone up 3 times. They don't have any money. They're not consumers, right? I mean, they don't have anything extra, but essentially what they have is this wealth effect that has now hit them because they have $1 million house that they had purchased for, $300,000 just a few years ago, or what seems like a few years ago. And this is where a lot of people are now sitting. They're like, man, I'm a millionaire, but they're not really a millionaire. They're sitting on $1 million asset, and that's different. It's a different thing. When it comes to consuming, the people who have cash flow, the people who have cash flowing assets, rental properties, dividend paying stocks, like businesses, that type of asset is the consumer. That's where the consumer is happening. So people say, man, I don't get it out there. Everybody I talk to, they say the economy is terrible and they're not doing very well. It's like, yeah, well, if you're talking to 80% of the people, you're probably going to get that story. It's hard to find the 20% of the people who are doing well. They're not hanging out with the working class. They're like, they're super wealthy people. Forgot to hit the like button. Oh, John, how could you? Thank you for hitting the like button. 123 people watching with 34 likes. Continue to hit that like button. Deplorable. Little did they know they could sell their stick-built house, buy a piece of land, drill a well, and put a double wide on it for half the price is what their house is going for now. Yeah. Someone said the real poverty level is $140,000. Yeah, you think about that, man. Like, that's crazy to think. When I was like growing up, I figured, man, if you could get $100,000, you would be just absolutely killing it. Like $100,000 a year would be like all the things that you could ever possibly have imagined: the nice cars and the vacations and the retirement and the beautiful experience in every single way. And then one year I made $100,000 and I thought, dang, that really isn't that much money, is it? Like, if you're raising a family and you're buying a house and you're trying to save a little bit, that's it. It's out. Like, there's nothing left, and there's really very difficult to try and make it, especially in the 10th most expensive place in the entire nation for, populations 10 to 50,000. That's Astoria, the 10th most expensive place in the entire nation for populations 10 to 50,000. And I have a working class job trying to make it here, and I would not have been able to do it if I didn't have YouTube going. Like, holy moly. I would have had to leave this area. I was like pushed essentially into buying at a time in which that I thought, man, if I buy now, it's going to crash when the interest rates go up and I'm going to be devastated that I bought this house and it's going to be horrible. And I thought for sure I was going to go underwater, and I mentally prepared for that. And man, did it just do the exact opposite and go the other way. I mean, right now, I couldn't believe it. Like, the house is sitting on $50,000 more. Like, the ZELLE estimate, which I don't necessarily trust, especially when it was way up there. Like, at one point, the ZELLE estimate on my house was like $100,000 more than what I had paid for it just a couple of years ago. And I knew that wasn't right. So when all that money had dropped out and it's now been hovering where it has been for quite some time, it's still $50,000 more than what I had paid for it just 4 years ago, which is better than 10% increase, right? This is not none of that seemed reasonable. None of it is accurate, and that should never have seemed to have taken place. And then when I start to look at one of the reasons why it started happening here, and I look out at the people who are now working in my community, and I got this huge hospital district, I got this gigantic retirement community that's coming in, all these remote workers. This is like all the vehicles that you see driving around. Like, I drive the ugliest cars in Astoria, and I'm thinking, oh man, right? Gentrification is the Cantillon effect. It's coming in there. All the people who are buying up these houses, they are literally driving the prices up to the point that the working class individual just can't cut it anymore. And that is scary as hell for my kids. All right? What are they going to do here? All right. Equity means nothing until you sell. You're absolutely right, but it does give you a much better feeling about being in your house and making the payments than if you are underwater, right? Like, I mean, just the like, it doesn't matter, right? If you don't plan on selling it and you're going to live there for the rest of your life, it doesn't matter if you're upside down or sideways or got $1 billion. It doesn't matter, right? But I tell you what, when you have the feeling inside that your house is worth more than what you're paying for it, that is a really, really good feeling, right? And with that comes the wealth effect if you're not paying attention to what you're doing. And that's what ends up happening to a lot of people, and that's the point of it, right? Is that once that value of that asset starts to move up, literally people go cha-ching, 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 right? And they're thinking, oh man, I'm in the money, but they're not, right? They're not in the money, they're in the wealth effect. And then from there, they're a lot easier with their money, and they start flowing out. It starts flowing away from them a lot faster. All right. Work harder, kids. Work hard, cut back, put your money towards assets. Think about it. This whole idea that Trump is going to give $1,000 to all these newborn kids for the next couple of years, and if they put that money towards a return and it builds up over time, think about what would end up happening with that if that was just for a select group of people, right? And you had, like, say 5 years of that. I'm just a total hypothetical, and I'm not trying to say this is what's going to happen or isn't going to happen. I'm just saying, if we took a hypothetical situation where 5 years of people, all of a sudden this group starts coming into the economy with abundance of money, now competing against everybody who didn't get that, right? Like, all the people who are 1 year from missing that now have to work incredibly hard, come up with all these assets, try to figure out a savings that then will compete against those people. Because once they start entering into the economy, they're going to have all the money to buy the apartments, the cars, and everything else. And all these working class individuals who are trying to keep up will fade away and fall apart, and you will never see from them again. There will be the final driving of the wedge of inequality that will then separate the rich from the poor forever. Never to return again. Especially if they really did it right, where the parents were like dumping another $500 a month or something into it. So by the time they were 18, it was just like boom, right? Just an explosion of money that they have, that they could just really go out there and just kill it, right? Comparatively to all the rest of the people who are flipping burgers and serving beers trying to keep up. That's going to be a horrible experience for them. Horrible, all right? But, they'll probably come up with some other game plan and, offer them, some kind of hope. Hope and dream. All right. The Bank of Japan also uses the credible threat theory. They are issuing a message of raising rates and cause the market frenzy to their bonds. Yeah, well, Bank of Japan was like essentially like the master of the forward guidance, right? They were the king of forward guidance. And so by actively saying, hey, we are going to do this into the future, we are going to buy bonds, we are going to pin rates, we are going to do this, that forward guidance is different from the credible threat. Like, the credible threat is, forward guidance is part of it, signaling is part of it, but really, to me, like, a credible threat is one in which that they don't necessarily, it's not so overt. It's more covert. Like the special purpose vehicles, like, hey, we're going to buy we're going to set up a special purpose vehicle, fund it with hundreds of billions of dollars, and then buy corporate debt. And the news exploded. Corporate debt just all of a sudden just found all the buyers in the world because they were essentially being like the market was front running the Federal Reserve. And then once the special purpose vehicle was established, that entity that was separated from the Fed and the Treasury and funded, they didn't really need to buy anything. All the corporations essentially found all the funding they needed. Right? That's a credible threat, in my opinion, right? That's a little different from the forward guidance, which is a definite direct message saying, hey, we are going to stay at zero for a significant amount of time. That's a forward guidance, right? That's why people say, man, you don't know anything, credible threat. They taught about that in Economics 101. It's called forward guidance, and it's not the same. It's different. Credible threats is part of forward guidance. Forward guidance is not necessarily a credible threat. Right? I mean, it's a part of the credible threat theory, but the credible threat to me is a more of a covert operation than the overt operation of a forward guidance. Thank you so much for that too. I really appreciate it. Thank you for being here, Buffalo Blanco. All right. I sent my C19 funds 100% into food. Around me, I noticed a lot of motorcycles and loud cars, music systems around the what's the deal with SOFR overnight blowing up over the past 5 days? We've kind of covered that a few times. What is that? Space Bunneth? We've kind of gone over that a few times, and essentially what has ended up happening there is, in my opinion anyway, and I mean, time will tell, and really, like, we'll find out. But I believe that is regulations within the banking system itself that has constrained the balance sheet. It's like a balance sheet constraint that has then forced the big banks to demand a higher return on interest rates for essentially lending into the secured overnight financing. So to think about it, like, most of the time, the idea that the bank can just do whatever it wants would then not have the SOFR moving up above, like, say, the Fed funds rate, which is not a secured overnight lending. The secured overnight financing would be much cheaper than the Fed funds rate. At least that would be typical of it, unless you have an inner banking constraint that then says, hey, you can't keep doing the operations that you are doing unless you are holding more liquidity, more of these particular assets, or holding more capital. And with that ends up causing an expense to the bank for doing that, right? They essentially got their balance sheet up to a particular point that then, if they were to add more to it, it would then cost them in a capital requirement. So if they're going to cost them, they need to demand a higher return on it. Does that make sense? And so this is one of the reasons why it's moving up. It's a banking regulation constraint that's doing it. All right. The balance sheet is why BTC can even work, in my opinion. I know that sounds crazy, but there has to be money in the system for crypto stock gains. Yeah, absolutely. Like, crypto is a side effect. I mean, I don't know. Like, to me, like, cryptocurrency, I mean, although it was a good idea to say, hey, here's a digital currency that we can trade and and they're outside of the banking regulations and all the other stuff that goes with it, that's real, like, fun to think about inside of that. But ultimately, it's Gresham's law that is going to end up kicking in if you have two currencies in play. One of them's a good currency, the other one's a bad currency. The good currency is always going to get hoarded away. And the more of a demand for that hoarded currency, the more the price is going to go up. And this is what we are experiencing essentially within gold and Bitcoin and the other limited supposed currencies out there that's actually more like money. Fiat's currency. Trading goods for services for other goods and services. That's it. That's all that currency is good for. It's not meant to hold value. It's only meant to trade one thing for another. And the longer you hold on to it, the worse the option of being able to trade it for a comparable value takes place. So knowing that to happen with fiat then alleviates the idea that it's losing its purchasing power or whatever, or they're destroying it. Yeah, that's it. That's built into the fiat currency system. We know that, whatever. Like, we can't stop it. So once we then recognize that we can take that fiat currency and transfer it over into something that is going to be limited, like Bitcoin or gold or real estate or something of that nature, now we have a proper idea on what it is that we are supposed to be doing with fiat. Saving it and then complaining that it doesn't hold value is like, I mean, you might as well just be, screaming into the sea, into the sea of nothingness, right? Because it's like, there's no way of reversing it or changing it or expecting it to be anything different than what it is. What time is it? All right, guys, I got a few more minutes here. When Bitcoin reaches all the Bitcoins in the when Bitcoin reaches all the Bitcoin in the market, then it should sever ties from the dollar. Well, essentially, we have it all out now. There's very little Bitcoin that's going to be trickling in over the next 100 years or whatever. So what, the 19-something million coins that are out is what's out. And so we are there. This is like essentially all the Bitcoin. And to think about any kind of increase in supply, it's going to be such a small amount that's coming in that it just really isn't going to be anything like I would say, of any kind of significance beyond what it is that we are experiencing now. So it's super important to get yourself some. Like, I buy $50. I'm going to, even though it's up today, I'm buying $50 here when I'm done with this. I'm going to go and fire up the Robinhood account and put another $50 in that one. And I do that every single Thursday, right? Sometimes I miss a week, right? Sometimes I'll do it twice a week or, whatever. But I try to do it every single week. I try to buy $50 worth of Bitcoin, and I've been doing that for such a long time now. I have no idea what my average is. All I know is that I am glad I have close to half a Bitcoin right now, because it makes me feel a whole lot better about what it is that's going to happen going into the future. When it comes to digital assets, stable coins, and cashless societies and all that other stuff, if I'm in a digital asset like Bitcoin, I know a lot of people don't trust it. That's cool. Like, don't trust it. I don't have much of expectations for it, because I have on the other side of that silver and gold. So I got outside of my I got my insurance policy against my third party risk. I don't need to position myself in really anything else. There's plenty of other things that you could do it in. If that's what you're like and that's what you feel comfortable with, go for it. But, guns, bullets, food, whatever it happens to be. For me, I like the positions that I have taken. I think that they're adequate. And when it comes to trying making money, yes, I play in the system. So I'll do stocks, I'll do bonds, I will do whatever it is that I feel is going to make some sort of return out there, because I ain't that scared, right? I don't have fear. I don't fear the markets. I don't fear the economy. I don't fear the New World Order. I don't fear any of that stuff out there. There's nothing to fear. Right? The only thing you really have to think about is, what is it that I understand about what it is that I can do about chasing the excellence, providing something that is helpful and useful, and by doing that, hopefully I will get some sort of return off of it, and that's my mindset, right? All right, moving on. Something is only worth what someone else is willing to pay for it. All right, BTC is better than gold. I'm gonna take this one like here, right? BTC versus gold. Which one is better or worse? If you were to do this, right? Take, for example, if you were to right now, remove Bitcoin from the earth, right? From existence, from everything, right? Remove Bitcoin right now. Very little would change. Right? Very little would change. Some people would be pretty upset. There would be a little bit of disruptions within the, some people's financing and whatever. Okay, so that may be a little disruption. If you removed Bitcoin right now, disappeared, boom, gone forever, wouldn't change much about anything. You remove gold from the system and the entire world changes. Not only just from the industrial side of things, that has our way of life that is now essentially existing because of the ability to use gold to transfer information and electronics and digital, communications and all that. If it wasn't for silver and gold, we wouldn't be able to do any of that stuff. So which one's greater? I mean, you remove Bitcoin from the system, really not a whole lot happens. You remove gold and the whole thing is just completely changes the way our experience goes. Which one's better? Definitely gold. You remove Bitcoin, doesn't matter. Remove gold, big time matter. Okay? You can't have fear in these markets. You can't have fear anyways. Yay, what's up, Professor Simon? Hey, Juan Cox 101, thank you so much for being here. Thanks, Simon. Yeah, you bet. I mean, But that's the thing. Like, I like both Bitcoin and gold, right? I mean, I'm more of a fan of the precious metals than I would be of Bitcoin, but like, I have more Bitcoin than I do precious metals, and it wasn't like I wanted that, right? Again, like I share that with people a lot. It's like I did not want my Bitcoin to be worth more than anything else as far as what it is that I have out there. It just happened to be that way with the incredible rise. Right? It was like, wow, man, that really moved. And I mean, don't get me wrong, silver has had a nice move to it, but it's not something that is like moved up in such a dramatic fashion like it has with Bitcoin. Like Bitcoin is just like, oh god, like even the altcoins that I have purchased, some of those, like, tripled over the last, couple of years or whatever. I mean, it's just like, dang, man, this is amazing. But I don't have a whole lot of trust for it, right? And so with that, I just don't have expectations of it or anything else. I do have expectations in other things, and I have, like, a belief in a lot of other stuff that may very well fail, right? 401k. People are like, oh, dude, you can't have it on a 401k. And I'm thinking, I have a 401k that's doing very well, and my boss is contributing. He's like matching a bunch of it. That's like free money. Talk about like, how do you pass up free money? That doesn't make any sense. Like, somebody says, oh, don't have a 401k. And I'm like, even when the employer is matching, it's like, here's a bunch of money. It's like, why would you do that? Why wouldn't you? Of course you would. Yeah. Or, I mean, maybe you wouldn't. I do. Yui, excellent explanation of gold versus Bitcoin. Yeah, you bet, guys. Well, I mean, I thought about this stuff a lot. You know that. I mean, I'm out here every single day trying to break this stuff down. And many times people have asked me that question, which one's better, Bitcoin or gold? And so, we had to discuss it for a long time. We kept shoving it back and forth. And finally, I just said, okay, which one would be better if it was gone? Right? I mean, if it wasn't here, what would happen? And if Bitcoin wasn't here, nothing would really change. Like, most people don't have any idea what Bitcoin does anyway. You remove gold and, right, the whole world gets upset. All right. Who conceptualized BTC doesn't matter as long as we can see the simple and open source computer code is sound with no backdoors. That's it. And that's what I think is, like, I don't know how to read computer code, but people who do can read every single thing that's happening. It's open source. They can totally look at every single bit of the protocol and then just determine right there. Like, it's like, it's not, like, I'm not a computer geeky guy kind of thing. Like, I don't understand any of that stuff. But the people that I have talked to, like, who do understand that stuff, they're like, no, man, this is like, you could take the code, you could take the open source code and create a whole nother Bitcoin all by yourself and name it whatever you want and change the code or do whatever, but it doesn't change the original. All the ones that everybody is now mining and using and the protocol that they're on. Like, the forks, the Bitcoin Cash, all the Bitcoin Diamond, all these other things that happened, those were like different shifts of the original protocol. So as long as people are sticking with that original one, then there's really, I don't see any, I mean, quantum computing could mess it up or something. I don't know. Alrighty, guys, I'm going to give it another 5 minutes here, and then we're going to call it quits. Whenever the topic of how good one's business, everyone except me lies claiming how busy one is, cannot hardly keep up, never been better. Here's the thing, Island Waterjet, man, I gotta learn to read. Island Waterjet, here's the thing. Anytime anybody has ever asked me, I'm a salesman, right? So I always have to keep that thing going, that sales thing going. So I've learned to answer questions in a way that then leaves it in a way that can be very interpreted and very... Somebody says, how's business going? It's unbelievable, man. Yeah, doesn't matter what. It's unbelievable. Anybody could take that for whatever they want. Like, I mean, it could be good or bad. But that's the way I answer the question. That way, they can take it for whatever they want. But that's the way, like, a lot of people end up. Like, I even ask contractors who I know quite well. I see them every day, Right? I see these builders, remodelers. Astoria is different from a lot of other locations. Astoria is a very, very old city, right? I mean, we're talking buildings here from the 1800s, early 1900s, and then modern stuff as well. But the place is in a constant state of repair. Right? So there's all these old houses that constantly need to be worked on. And so a lot of our customers here are essentially remodelers or like handymen, kind of thing. But they're, definitely in the game of, being able to build a house if they really wanted to. But a lot of these guys here, they just kind of work on the homes here because there's just so many of them that need to be worked on, right? And when I know there's a slowdown taking place is because ultimately I get phone calls looking for those people. When I don't get the phone calls looking for those people, it means that there's plenty of those people available to do the work for whatever work is available. Now, here's the flip on it is that I will ask the contractors, how's business? They say, oh, it's really good. And I say, oh yeah, how far out are you? And they'll say, oh, I'm about a year. And I'm like, okay, what about after that? And they're like, no, I'm like, I got a couple of projects lined up, but the phone calls coming in for after that, like once they got these ones done, it's slowed down, right? And so these are not as frequent. So when I ask them, are you busy? Oh yeah, we're busy. How busy are you? What do you got after this job or the next jobs or, after that 6 month, period of where it is that you have like basically in your menu of projects to do? After that, how many calls are coming in? How many people are looking for bids? How much are you actually doing beyond what it is that you've already got scheduled? And that right there, boom, off a cliff, right? Off a cliff. And that's hard to see, right? You can't. That is anecdotal evidence. You cannot go to a computer screen and say, hey man, what is it that the future holds for possible future projects? Right? You can see where permitting issuance or, requests for ideas like, maybe site surveys or something that could give you an idea on what it is that's happening out there. But when you got like a drop in people who are calling, looking for builders, looking for contractors, like I have experienced here, it's telling me about how slow it really is. And when I talk to a lot of these guys, you say, oh yeah, I'm busy. It's just like, oh, how busy are you after this next 6 months to a year? And they're like, I really don't have anything lined up after that. There's no calls coming in. There's really nothing else. That, again, very telling of the times. Okay? Now that can change very quickly. I mean, all of a sudden you can just have it ramping up, but it's not in the cards so far. Have to admit, contractors here are super busy building a house now. They do not want to take on new work, and no small jobs at all. Fair is fair. I can understand that. Yeah, and it's very true. In fact, I had a contractor who came to me who was very worried about what was taking place with tariffs, and he quit doing bids. He was like, nope, I'm too worried that I'm going to bid it out wrong and end up costing me and screwing it up. And he literally he started turning down customers. And so I thought about that, and I'm like, holy moly, man, like how many are doing that sort of thing, Are they really busy, or are they just busy right now saying, I'm just very cautious about what the future may hold, and I'm not gonna agree to anything? Yeah. And so that can very well be taking place as well. Is the economy worse or similar to the Reagan administration? I gotta go, but in my opinion, it's worse because during the Reagan administration, at least you still had some sort of idea that the working class individual would have a chance, and they did, right? Like if you had a regular job, just a regular job, and then if you had a good factory job, even better. But if you just had a regular job and you were somewhat disciplined, you could still, get a house, you could get a car, you could have, the things in your life. You would have to be very cautious on what it is that you were doing, but it was still possible, and it was, available to most people out there. We have now moved away from that. So even during the Reaganomics, the Reagan administration period, it was a different type of economy, right? That separation between the rich and the poor, the asset holders who had moved so far away, that wasn't taking place in the same fashion. So we can't necessarily compare ourselves to back then saying, oh, well, they had it smart with their economy. We've moved on, right? That wedge has grown so much wider. And again, you can blame it on everything you want, all the politics and all the corporate greed and all the other stuff, but ultimately it comes down to ever increasing amounts of new money that the American people beg for, because every time that there is a problem, they say the government should just, and then the money printer turns on, right? So anytime you ever hear that, the government should just think about inequality that occurs because of that, because there is literally nothing the government can do without creating more inequality. I know for a lot of people, they don't believe that. They think that but that's the truth, because there's really nothing in history that can prove anything different. Not without like major painful experiences and very short-lived moments of like, this was nice, wasn't it? This 10 years, whatever. So they can like pinpoint like moments in time, but then nothing lasts, right? Because you have to understand there's underlying economic forces that are playing out. Even if you have the government involved trying to prevent a certain situation, the underlying economic forces are still playing out. That's the reason why tariffs, are so dramatic right now, is because without them, you would find that there is no hope for the domestic manufacturer at all, which there really isn't anyway. All right, guys, I gotta go. I gotta go back to work. All right. What should my retirement plan be as a freelancer? Cash flowing assets. I don't know what to say. I really don't. Like, I try not to tell people how to invest their money, but to try and understand where it is that they need to be. But there's a million places that you can go to try and find a return on your capital, right? On your money. Dividend paying stocks, right? Rental incomes, businesses of some sort if you have a skill set. I don't know what it is that you need out of there. There's bonds will pay a yield, right? There's all kinds of places that you can go to try and get a return. Start small and get creative. Like, if you have no idea at all, then like maybe get into some like Google dividend paying stocks, and then start there and figure out how to become a stock trader or something. I can't tell you what to do. I'm not going to try and tell you what to do. I tell you what I do all the time. I mean, I say it all the time. I'm buying gold. I'm buying Bitcoin. I'm buying into a 401k. I got my house that I'm making payments on. I got, a stock portfolio that I buy into, like things like Coinbase and a few other, ETFs and stuff like that I have picked out. I tell people all the time what it is that I am doing, right? And then I side hustle. I got a bingo game that I call once a week. I do the YouTube channel. I try to do some sort of affiliate sales, which there's a link down in the description to the Amazon affiliate link to the Cantillon essay. You don't have to buy that essay off of Amazon. You can get it for free at the Mises Institute, but by clicking on that affiliate link, you can support the Uneducated Economist by buying anything from Amazon. Just click on that affiliate link first and put whatever you want in the cart for the next 24 hours and make the purchase within the next 30 days. And since we're coming into Christmas, use that affiliate link to support the Uneducated Economist. I'm trying to tag products here on YouTube now, so I got the heated coat thing, trying to make that happen. First time, so I'm not really trying to push that or anything, but just saying it's there. Whatever I can do. Because if you don't do that, you're probably going to fall behind. Asset holders are definitely going to be on the upper side of the wedge, and everybody else is going to be very devastated and very disappointed with the future if they don't do something like that. Man. Uneducated Economist. You guys let me know.